Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video I want to talk to you about a few updates that I have for my investment portfolio. I also wanted to provide a few other key recent changes that has happened based on some of my recent posts that I've had on Blossom app. For those of you who are not familiar, Blossom is an amazing community of investors here in Canada and the US that can come together, share their portfolios, learn from each other when it comes to investing, financial discipline, and financial planning. You also can use this app for free, actually, to keep track of all your investments by linking your major brokerage accounts to the app and post content, learn from others, and of course, take a look at how different trades happen for each and every investor as they occur throughout their day-to-day investment journey. So that's really cool. One of the recent posts that I've had myself on Blossom app about, I would say, a few days ago was about the fact that I actually unfortunately got into an accident several weeks ago, and unfortunately, through that accident, my car was deemed to be total loss, and that's why I was in the market to actually find a suitable new car. In that post, I'd actually asked folks if they have any suggestions, what their recommendations are, what car makes and models what would be kind of recommended. I did mention a few criteria such as looking for an all-wheel drive, either SUV or sedan, though preference was somewhat to SUVs. I was considering anything either used 2020 or newer, and possibly considering brand new cars if that was something that was within my budget and something that I was comfortable with. And I did say that I was gonna spend maximum of $35,000. Now, I did definitely took a lot of remarks from the sharings. A lot of folks did add a lot of values. You can see here as I'm scrolling, folks talk about Toyota, Mazda, BMW even, and different types of inputs. What was fascinating for me is through all of those comments that I got on Blossom, majority of them, I would say, no kidding, they were actually referring to considering a Japanese car because of the quality that they bring to the table, as well as the fact that many of them have, high quality, reliability, and also after sales value. So that was really, really interesting for me. Toyota stood out from the bunch, aside from Honda. I think Toyota and Honda were the two brands that really stood out the most in many of the feedback that I got on the comments. And beside that fact, actually, some of my other colleagues at work that I've chatted with, and they drive different cars, I also heard loud and clear from them that Toyota was a good option to consider. I was hesitant now in between whether buying a brand new car or a used car, and I was going back and forth on this. My decision point was really based on the amount that I was willing to pay. If the amount, as I did mention, I was hovering around that 35,000, but at the end of the day, when I looked at it, a lot of these Toyotas, particularly RAV4s, that I was leaning towards ultimately to get a SUV car, especially given that I live in an area that actually we have winter, like typically strong winters, like in Edmonton. For those of you who may be familiar, we have definitely some snow. So having an SUV would be really nice, especially an all-wheel drive SUV. Really gives you that advantage, a lot more control over your driving. When I kind of leaned towards SUV, in particular RAV4, and after I did the test drive and really loved the car, now the question was, can I get a used car within that price range of 35? And really, it was not the case, especially if I was going to find something that was at least XLE, the trim model that I had in mind, because I wanted at least heated seating, heated steering wheel. With that, really the options were limited. And many of the ones that I found, at least with used car newer than 2021 or so, they were possibly had an accident or there was something off with them, and many of them had really high kilometers. There came then my search for trying to find a brand new, XLE, Toyota RAV4 XLE for 2024 model, and then trying to go around and look around and ask different dealers for the price. The challenge that I face in many of the dealers here is that those that especially had some models already in their lots are the one that they've already added a lot of accessories because they want to charge up higher. Like, for example, even though the price that they quoted for the car was, let's say, 43,000, some say even 44 or 45,000, they did mention that, oh, this is even before all the taxes and as well as the winter package and all of those things. Some even added etching and trying to really jack up the price. So I was not really happy with how many of these dealers kind of were treating So much so that I kind of lean towards the option of maybe I have to do a factory order. At least that way I can get cheaper price. So at least these dealers don't add up a lot of the price. In my search for that, I came across another dealer here, and actually two different dealers, a Toyota dealership, and reached out to them online and asked them for another quote all in. So I asked always, tell me the all in price. I don't care about the MSRP or all of that. I want to know the total price with tax. And actually, there were two of them. Those two that I reached out, they really gave me prices that I was a lot more comfortable with, as opposed to initial prices of like 50,000 or something that some other dealers had quoted me. These were a lot lower, and I would say hovering around that $42,000 mark. It's still quite pricey, but at the end of the day, I knew that I'm also gonna get a brand new SUV, which is very reliable, and also its after sales value, for the most part, it maintains it quite a bit. When buying a new car, I do know that it's not an investment. I don't consider it an investment. I know that over time it's going to lose its value. But so my main criteria was safety of the car, something that I was comfortable with in terms of amount purchased, but also something that I know that it's going to protect me and my family when we are going to drive this car. Long story short, today was the day. Actually, we ended up finally meeting with one of the dealers that over the phone I had kind of had some sort of initial agreement. We've put down now the $500 deposit. And this is for a brand new 2024 Toyota RAV4 XLE. It's not a premium, it's just the XLE model. And I'm super excited about it. And so far, what they've told us is that most likely we can expect to receive the car by the middle of April. So we'll see how that goes. Like I said, we've only paid a refundable $500 deposit, but we're staying tuned, keeping our fingers crossed for hopefully we're going to receive the car sooner. If not by that time, and we're happy with it, we can definitely wait a few more weeks. That's not going to be a problem for us, and we'll see how that goes. Let me know what your thoughts are and guesses are on how much you think was the amount that would be a fair amount to pay for brand new 2024 XLE that is going to come. Maybe even so for those of you who are curious, maybe guess what color you think I actually went with. There were definitely a nice range of colors to choose from, and I definitely picked the one that I think I like the best personally. So I'm curious if you can guess what that color is, or how much is the price that I kind of ultimately landed on. But all in all, I'm happy with it, given that I've done a ton of research, and honestly, this was the lowest price that I could ever get anywhere else. So I'm happy with it. Let's hope and pray that this goes through as intended, and hopefully there's not going to be a surprise in a few weeks that there's something else that this dealer is going to come. So far, our experience has been really good with this dealer. I would definitely provide more details once this deal goes through, and hopefully we get the car as intended. With that out of the way, I also wanted to share a quick update of our portfolio. So I'm going to hover over to the Blossom app, the tab on portfolio. You see the details. On the last trading day, which was last Friday, the market was down about 0.20%, or our portfolio was down about $1,200, roughly $1,300. But if I hover over all time, you'd see that our all time portfolio size is just over $645,000, and it's up all time $74,483. Keep in mind, when it comes to portfolio return and the balance, it's based on actually the holdings that I have. And right now in our portfolio, we have 3 ETFs, XEQT, which is our largest holding. We have close to $585,000 in it invested. Then VT and VTI. VT and VTI are, VTI first and foremost is Vanguard Total Stock Market Index ETF. And VT is, again, another Vanguard product, but this one is Vanguard Total World Stock Index Fund ETF. VT and VTI are both in US dollars, and my wife and I, we hold it in our RSP account. The reason we are holding these 2 ETFs there is that we want to try to minimize the impact of any withholding tax for foreign dividends. I received some questions earlier today when I posted about these 3 fund portfolio that I have, and some folks were asking me, hey, is there a reason that you're actually holding VT and VTI and not just XEQT? To which my response was, indeed, XEQT would be probably more than enough for many investors. You are more than enough to actually have even one single ETF portfolio, and that would be excellent. But if you are considering potentially, and if your portfolio size is larger and you want to consider minimizing your withholding tax impact, then holding on to some US dollar ETFs, in this case, VT and VTI, meet those criteria in your RSP account might be a nice kind of consideration. However, you have to keep in mind, you're also, in many cases, have to pay for a conversion fee when you're converting your Canadian dollars to US dollars to buy these ETFs, and also later down the road when you're trying to possibly sell them to cash out and use the funds for your sustaining your early retirement or whatnot. But on the positive side to it, I would say VT and VTI both have a lot smaller MER. Their MER is, I believe, is closer to 0.06 and 0.07. Don't quote me on that. I will check it momentarily, but those are a lot smaller MERs to consider. And yes, just to clarify, VT's MER is only 0.07 and VTI's is only 0.03 versus XEQT's MER is 0.20. Definitely a lot lower MERs there. So that could also play a part when it comes to over long enough period of time, it may break even, and at one point VT and VTI might be the better choice, holding them for a long time in your RSP, as an example. Now, when I posted, there were a ton of interest in this Blossom post. You can see in total, there was a total of back and forth in terms of replies and initial post of 707 comments. I'm going to go through some of those top questions that I received and share a little bit of more details because I know those were some things that especially came up quite a bit. One question that I got was from Khan. He was asking me, one thought was, why do I invest so heavily with XEQT? What is so special about it? Khan, that's a great question. Thank you for asking that. The main reason I actually choose to invest heavily with XEQT, and it's not the only product of this kind, but it's one of those ones that I actually ended up going with, is it's considered an all-in-one ETF. What I mean by that is that through this one single ETF, I'm already getting exposure to the entire global stock market, including US stock market, Canadian stock market, international developed market, as well as emerging markets. Now, the weightage is different. For example, within XEQT, roughly about, I would say 46% or so of my portfolio exposure, around 45% is to US, around 25% exposure is to Canadian markets, around 5% to emerging markets, and the remaining part are to international developed markets. XEQT already consists of 4 underlying ETFs, but all of those ETFs provide us those geographical exposure that I talked about, and we don't have to worry about anything. It does automatically rebalance for us, and through that whole exercise, it also we receive some dividend, which, like I said, we don't care about the dividend. Actually, it's mainly the most important point for us is truly having that overall appreciation of the price of this ETF, which actually has done quite well. In fact, looking at the year-to-date return for XEQT, it's up by 9% already, 9.3% year-to-date, which is just quite nice. In fact, if you look at longer-term return, at the end of February of 2024, the one-year return was showing to be up by 18%, 3-year annualized return of 8.9%, and its annualized return since inception was at 10.9%. And the inception date for XEQT goes back to August 7th of 2009. So it's not been around even 5 years. It's just getting to 5 years by the time that it hits in August. Its cumulative return, if you were invested in ETF since the day it just got launched all the way until now, your cumulative return would have shown a positive return of, in less than 5 years, of I would say 60%, more than 60%, which is quite decent, I would say. And for me, I'm quite happy with that. I'm very pleased with those average return of the market, which is just decent. I know some investors out there that love investing in the US stock market, and I think it's fabulous. The only, I think, downside is that if you only invest in US stock market, you're missing out on potentially other markets that may have some great years as well. And that's why I think that some diversification globally is gonna prime you better for like a more success down the road, and potentially less volatility, at least when it comes to investments. Marcus was asking me around saving down for a car, because I had referred to that, and I did mention that I'm overall has been always a frugal person, and even in this, when I was talked about buying a car, I still wanted to make sure that I don't have to really do a lot of selling or anything like that. Luckily, I didn't end up having to sell this portfolio. We had some savings on the side and whatnot, but we'll see how that goes. Nina was commenting on VTI being a nice one. I believe Nina is actually in the US, and that's why VTI is a perfect choice. It provides you exposure to the entire US stock market. And I did comment that VT is as well as a nice one, because VT is almost the equivalent of XEQT. It's a globally diversified ETF, albeit it has higher exposure to US market and a lot less exposure to Canadian market. I believe VT's exposure to Canada market is only about 3%. Let me see if there are other comments that I can touch on here. Yeah, Tyler was commenting on how good easy it is actually going through ETF passive investment because you don't have to do a ton of research when it comes to stock picking. I totally agree with that. Um, Karthik was asking some question around uh, the impact of dividend stocks in TFSA and RSP and whether there is going to be any tax filing. And to which I did respond. And this is based on my knowledge, but again, I'm not a tax advisor nor a financial advisor. So please do your own due diligence. I did share some useful links for Karthik as well. But the point being is that when it comes to dividends for Canadian stocks, in TFSA, your capital appreciation or their dividend stocks from Canadian markets are not taxed. But when it comes to, of course, US dividend paying, they are subject to some withholding tax in TFSA, unless you hold them in an RSP account, at which point the withholding tax, there is that desirable treatment. But for non-registered account, like my case, I do have quite considerable amounts of money invested in non-registered. There is going to be tax impacts, but you're going to get definitely the tax forms, so you don't have to worry about it when it comes to filing taxes. And Nasir asked me about my principal amount invested, to which I did respond for the entire portfolio. And it's harder to provide a clear picture, but I do have a Google dashboard that I've developed, and I'm going to share it momentarily as well on the screen, whereby I have transparently discussed how much I've put in this portfolio. As you can see here on the screen, momentarily, you do see that for this portfolio, we have put in $530,000 overall invested, but this is since the very beginning of the time that my wife and I started investing. And I started investing about 6 to 7 years ago. And when I started first investing, I did everything and anything that you can imagine. Investing in weed stocks, in fact, probably that was one of the earlier exposure to market. I think I started investing in weed stock. And I had some nice gains, but definitely I also learned my lesson. I invested in margin accounts, definitely all the stresses that comes with it, invested in some ETFs, invested in stocks, buy and sell, REITs, you name it, Bitcoin, all of that. Lastly though, I would say around a year ago, almost a year ago to date, I landed on an approach of investing passively through these 3 ETFs, and that's where I would say this portfolio has been shaped. That's the direction that my wife and I are taking. We're not trying to deviate from it. We're trying to stick to that game plan, and that's why it's harder to really truly show the returns. Like some of my folks may say, oh, you have been investing for 6-7 years, but your returns are showing, let's say, 22%. That's quite lousy returns. And I tend to agree, but at the same time, I have to also remind myself, and I'm not trying to defend myself. It's just, I guess it's the reality. I don't have anything to prove and to anybody. It's just to myself as a reminder, the fact that, ever since I switched my portfolio and stick to a game plan, and rather than trying to outsmart the market and trying to pick and choose winning stocks, this ETF portfolio approach has really done me so well. And you can see here XEQT, VT, and BTI, how their returns have been. This is going to be my game plan, and I'm happy with it. I'm going to stick to it, and I'm not going to change my course. For those who may be interested, I know some folks are, as you look at it, you do notice that the overall expected dividend income for this portfolio is currently at $12,159. This is for the entire year. When it comes to XEQT, it does pay its dividend quarterly, but its dividend amount changes every quarter. There are one quarter that the amount is less. There's the next quarter that goes up. The next quarter goes down, up and down. And this cycle repeats itself. So the next few days that we are going to receive a dividend from XEQT, the dividend amount that was announced was closer to 9 cents per share. And some folks were wondering, oh, why XEQT is lower this amount. It's actually a typical pattern of XEQT. It always does that. The next time, in the next quarter, when you're going to receive the dividend, you're going to expect a higher amount. I believe that one is closer to 20 something cents per share. Don't be alarmed. That's just how it operates. There were, of course, a lot more questions on Blossom. I do encourage you to check it out if you haven't done already. I do have a referral link that you can use from the description of the video. If you do, that would definitely help me to get some minor referral bonuses and really helps me to support my channel. I really hope you found this video beneficial, and hopefully it provided you some value. It inspired you to also get started in investing, or if you have an already portfolio, which is perhaps a smaller in size, to get much more inspired to continue and build on that momentum, because you know that you're going to get to that level as well one day, very soon, but just by having that consistency. My wife and I are buying shares of XEQT every single day. Doesn't mean that we are going to buy necessarily a lot. We used to buy a lot more, like for example, almost close to $300 to $200 to $300 per day. But right now, because like I said, I'm trying to save out for paying for that car, we've lowered the amount to a lot smaller amount, but we will probably catch up once we've gone through this purchase and we are able to get on our feet. But life happens. As one of my favorite hosts on the Choose FI, you know, um, podcast, which is one of my favorite podcasts, talks about it. He says that life is lumpy, and I tend to agree with that. There's so many things that life throws at you, and you have to stay agile, you have to stay alert, and then you have to course correct accordingly. With that out of the way, thank you so much for watching this video until the end. I hope to see you all next time.